The current Bitcoin price is $23,285. And there has been a lot that has changed because we now have the monthly close as well as the weekly close. And there are a few key pivotal areas that have been reclaimed for the Bitcoin price. So today we have a whole lot to look at. You can see over here on the monthly chart, we have reclaimed as well that 50 moving average, which is an important level to be looking at. And we're going to cover a whole bunch. We're going to discuss Renko getting its first green candle in months. We're going to discuss the significance of reclaiming that 200-week moving average, my buy the dip levels. So make sure that you stay tuned till the very end so I can give you that. I am also attempting a new challenge, which I'd love to share with you guys and get you involved in too. And then where does this plan fall apart and bears take back full control? So let's get straight into it. And the challenge, first, just to give you a bit of a heads up on what that's going to be, I'm looking to do a bit of a strategic trading challenge using grid techniques. And I'll be doing that live every time I take a trade. So make sure you have a look in the link in the description below. Sign up to Bitget. I'm going to do the challenge on Bitget. If you don't already have a Bitget account, make sure that you join over there, and we'll touch base on that shortly. Okay, let's have a look over here at the logarithmic curve over here. So on this chart, we've been tracking it for some time. We had 10 weeks, 8 weeks, and 8 weeks that we closed outside of that. And now we're starting to work on the next week. It's very important that we start to get back into this. We want to see that happen within the next 2 weeks. But if you have a look at this, you can see we almost tagged the lower band over there and have pulled back since then, but we want to see the next 2 weeks as a strong week where we rally into that and through it and then close above that band. Once you start doing that, then it could be game time. And you can see over here, if you look at this one, the previous time, that candle does look quite similar. You pulled back, and then the following week, you opened at about the same level, sold off a little bit, and then proceeded to rally right through that. And you'll see how this time ties in on the lower time frame charts and how potentially we could be looking for some bullish momentum in the weeks to come. So if you have a look over here at the Renko chart, now Renko, for those of you that don't know, it's one of these Japanese candlestick techniques, and essentially it just works out the kind of average momentum moves. Typically, it holds you in positions for quite a long time. So, for example, if you look at this over here, when it signaled red, it was at about $43,000 and it held red all the way down. And as you can see, we have just started to break that with the first green candle close. I like the way that you have that wick that's been left behind. It could show that maybe it's going to have some upside momentum for at least a couple of weeks. However, you have to be cognizant of the previous times there have been a couple of fake outs. For example, had you held it here from 39,000, you would have held that all the way up to about 43, which is only about a $5,000 move. But this combined with low time frame techniques on the 4-hour chart, you can get quite strategic around it, and you can plan ahead and use the trend as your friend until the end on a low time frame and give it a chance to reverse those all important daily time frames as well. All right, moving on over here, the same thing, another Japanese candlestick technique is the Heikanashis. You can see as well, they haven't given too many false signals. And currently we're looking at our third green week now, which is showing that there is a real slowdown in that downward momentum, and maybe things really are reversing. And as the tile suggested today, it says I'm buying at these levels. I'm going to outline in just a moment's time what those levels are. And just to let you guys know, again, the risk is still to the downside because of the macroeconomic environment. But despite our fears and all the noise around what's going on globally, if the trend is reversing and it's showing us that, we have to side with the trend always. So looking over here at the NASDAQ, now there's obviously different types of stock markets, right? You have like the NASDAQ, S&P 500, Dow Jones, there's a whole bunch of them. But the NASDAQ is the most correlated to crypto, which comprises of all those tech stocks. And if you look at that, you can see it says Caleb, he wrote here, the NASDAQ 100 officially flashed a bullish signal for July 2022 with the 18-month Williams percentage R oscillator closing above the oversold threshold. This is only the fifth signal since 1987. In prior signals, the bottom was already in, and statistically, this is bullish for risk assets. And I'm going to show you on the NASDAQ chart what I'm seeing. But if you have a look at it over here, that pretty much signified, well, that's the end of the dip and things are going to run. Bear in mind that all of this is going to revolve around what's happening with the Fed. And since so many people have been hyper-focused on the Fed and it's very forward-looking, the last Fed meeting that happened, Jerome Powell obviously bringing in 75 basis points rate hike and kind of insinuating that, they're not looking to go too heavy in the next ones. And now we have this break of about 50 days, I think 50 more days or so, give or take, before they do the next rate hike. That kind of gives the market license to attempt to run, in the sense that they know there's not going to be any real major interference from a news perspective. And if you have a look here at how the NASDAQ closed last week, I drew this line, which was really the orange one over here, which is really like decision time for the NASDAQ. And this ties in with what Caleb has said over here. You can see that the 3-day chart has closed with a higher high relative to the previous one, which was coming in at 314. We've now closed at 315. We do need to see how this new week opens, because remember, a lot of people trade these markets as a range. And what I mean by that is essentially they'll be looking at it as a range like this. And what you could find is some sort of a deviation above, and then you could pull back down. So you want to kind of give the market a little bit of time to attempt to reverse the trend. With that being said, I also want to say that there's a real difference between your time frames, right? Your time horizon. If you short-term bullish, medium-term bullish, or long-term bullish. What I'm referring to here is very much still a relief rally. I personally don't believe that the worst is necessarily over, although it could be. So any bullish narrative that I'm talking into here is simply more for the shorter term, because what you could see on the NASDAQ is, although we closed above here, we could reclaim that moving average, come back, retest, rally up to here, and we could still turn before these highs over here, which are more important in the longer term. And the NASDAQ could come back down and still tag that key quarterly level, which was the pre-COVID zone over here. That was my ultimate level that I was watching before I was going to get any sort of major buys within the market. So this could still be a major relief rally, and you could come down. So you have to be cognizant of that. I'm not saying that that's definitely what's going to happen, although it is a real possibility. So that's it for the NASDAQ. Now, very important, I want to touch on over here the S&P 500. This is the futures on the S&P 500. And you can see relative to what we're looking at over there on the NASDAQ, this has failed to do what the NASDAQ has done. It needed to reclaim above this zone over here, the orange, which is coming in at 4,180, and as you can see, it failed to do that. It closed just short of that at about 4,131, and now you have the new starting to open to the downside. So I'll be watching the S&P 500 futures chart very, very closely, because if this starts to turn, that could create the situation where you have that deviation, as I just explained, so above the range high and then come back down on the NASDAQ. So the relationship between these different stock market indicators is very, very important to be focusing on. And, there's also that saying, which just reminds me that scared money don't make money. So although there's always going to be a lot of scary things that are going on in the market, we need to look at the main asset class which we're trading, which is Bitcoin, Ethereum, and altcoins, and make our decisions based off of that. But it's important to understand the external risk factors in play. Okay. Looking over here at the Bitcoin dominance, another interesting thing that's taken place. I just want to move this onto a weekly chart quickly so we can have a look at that. You can see that I had this main diagonal trend line over here, which I'm not going to adjust because I do think that was holding perfectly and we have broken below it. The next key and important area that I'll be watching for on the Bitcoin dominance and expecting a potential bounce off of is going to be the 47% area, which allows for the Bitcoin dominance to still come down a little bit more. Let me show you over here. So that could come down about another 1.48%. And I would expect anywhere within this region over here as a support zone where Bitcoin dominance could bounce. And then, of course, against altcoins, that means Bitcoin's going to outperform altcoin. Now, for those of you wondering who may be new here, you'll have to follow me on Twitter. So it's going to be at Kyledoops over here. I have posted this before with the Bitcoin dominance because I don't use the traditional Bitcoin dominance that everyone else is, which is this one over here. And the reason why is because this one includes the stable coins. So I want to remove stable coins. Stable coins are stable. I don't believe they should be included. It should just be Bitcoin versus all the other altcoins. And in order to get that, you need to type in what I have on TradingView. So it's BTC divided by, in brackets, total minus USDT minus USDC, close the brackets, and you enter that in exactly the same on your TradingView, and you'll get what I always refer to as the real Bitcoin dominance, which currently is still in an uptrend. Remember, trend is your friend until the end. This is still in an uptrend. You have lows and higher high, higher low, and I would expect this to continue the trend until it doesn't. What is this? Oh, did I read the lyrics? No, I haven't heard those lyrics. I'll have to look that song up. Okay, moving on to the next one over here. Let's click here. Okay, we have Bitcoin on the weekly, and I think you're going to see so much of this week, which is the purple 200 weekly moving average. That historically in Bitcoin's history has been probably the most important moving average that people look at with regards to what Bitcoin is doing. And if I zoom out, you can have a look over here. For example, in COVID, let's zoom in. In COVID, you see, we sold off and we wicked straight back up. We only closed basically one weekly candle below, and then we proceeded to rally straight off of that zone over here. You can see that the 2018 bear market, the absolute bottom was found on that purple 200 weekly MA, and I don't know if we have much more history past that. Let's see over here what happened in, there you go. So it began in 2015 because you obviously need enough history for this moving average. And looking over here, it was the same thing as well for the 2015 bottom was also found. We closed, I think, maybe 3 weeks below that level, and then price proceeded to rally. So it's kind of become like a meme within the crypto market that reclaiming the 200 weekly moving average is extremely bullish and creates confidence within the market, which allows for a major rally. Now, very, very important. I touched on this for the previous show that I said, you know what, these market bottoms typically happen in wave patterns of 5. So you get Elliott wave, the Elliott wave theory, and that means that you kind of need to treat this as a dead cat bounce or relief rally until proven otherwise, meaning you should be cautiously and optimistically bullish, but very cautiously bullish. And the reason why is because if you take from top to bottom, we had wave 1, wave 2, wave 3. This would now be forming wave 4, and that means you still need one more leg down, which would take out the previous lows to create wave 5. Now, that's not to say that you shouldn't be longing, right? On the low time frame, look, the markets are very complex, so things can always change. Maybe this time it would only be a 3-wave pattern, and we proceed to rally to the upside. But I just want to point that out on the weekly chart. You have these, anytime that you've been below the 21 EMA on the weekly chart, for long-term investors, you kind of don't want to be going all in by any means. To show a strong uptrend, you want that yellow 200 EMA, yellow 21 EMA to be facing up, angled upwards with price above that. And I can show you an example of it over here. If you have a look at the previous run, so let's say we had lost it in the COVID dip, we reclaimed that level at $8,250, and we pretty much never went below it again. It was angled up all the way until those highs, and then you can use it as well when you start to deviate away from it. So you can see how far away price is from this zone over here. If you take the 21 EMA and you look at how far extended price is from that level, then you know, well, that should be your profit taking scenario. And it's the same thing over here. You want to reclaim this area, and these brutal bear markets, they typically tend to end with a bit of sideways action. So expect that price could rally into that zone, which is coming in at about $27,000, $28,000, and it may reject. And if you start to see a lot of sideways action like that, that would be a sign of a healthy market that is creating a strong base. The longer that base, the more strength you have for the upcoming and following bull run. So I'm by no means calling this a bull run for what it's worth. Okay, so that is the weekly chart over here. Now, very important, on the daily chart, it's the same thing, and I did outline this as well. Those 5 wave counts that you see, you have your leg down, so same as what you see on the weekly. 1, 2, 3, 4, you would still be waiting for 5, right? But despite that, there is important changes that have taken place on the daily, and this is how I would be looking to capitalize on that. Okay, first and foremost, you do have a series of higher lows throughout. So you got your, on the daily chart, 1, 2, 3, 4, and now we kind of pulling back, and you'll be looking for that next higher low, and that's the area that we want to buy, which I can tie in now with that whole grid trading strategy. So this is what I want to show you, the main zones that I'm looking at, and we're gonna review this at the end, and I'll show you how I'm placing my orders on Bitcoin price for this. So looking at this chart over here, the main areas that I have outlined for this higher low to form are going to be anywhere between here about the middle of this. So I just did that for the tile, but I can pull that down for the thumbnail at least. Let's just lower these levels. All right, so I am watching this zone over here. Okay, that's good enough. 22,800, and I'll be laddering in as low as, depending on when it happens. I wouldn't want to see it all happen today. That would be quite aggressive. So let's just say like sometime over tomorrow and the next day. These are the levels that need to hold. If Bitcoin starts to lose this level, it could get quite bad, because you would be losing that 34 EMA, which has been important. We've needed to hold above that very, very critical level. If you start to lose that level, then this would be the next zone that you want to target, which is the next higher low that you have. If you start to lose this higher low, then we start to get into like quite a lot of trouble. But I'm going to outline that exact zone as well. And we can put let's add a label on that for you. So that's 21,244. Make it nice and big. 28, I'll put $sign there just so you're not confused. Yeah, that's a zone. Price needs to hold above that. I would ladder in a little bit over here, lose that level, stop out, because it's a couple of % down. Or what you can do is also enter only some of the position over here, between here and here, about 50%. So I'm giving you a 3% range. You add that in there. Lose that level, well, then you need to start adding in at the bottom over here. So I wouldn't add anything in the empty space over here. If that level gets lost, I'll leave this out, and I'll just attempt to catch the bounce over there. Only buying at $21,400 is kind of the zone that I'll be watching. Now, a couple of more important indicators which I want to put on over here. Okay, I see prices coming down a bit again. Okay, firstly, is the bear moon. So as much voodoo as you want to call it, it works. Like, I don't know, it controls people's emotions. Look into the psychology of that. I was chatting with James, whose family has like restaurants and stuff, and they were even saying that, you know, they put extra bouncers and stuff at the door on days of these full moons and bare moons and things, because people tend to fight more. So it really, really does affect people's emotions, but typically it plays out over about a 2-week period. So as long as you're holding this over the next couple of days, as long as you're holding this diagonal trend line, I think everything will be okay, and it will just be a standard pullback, and then you can look to rally on the next thing. So there's someone's asking, when is the next bear moon? Well, this is the bear moon, this one that happened on the 28th, 29th of July. That one would be considered the bear moon, and I tend to treat the bear moon in a downtrend more seriously than I do the so-called bull moon. And I don't know which one's which, guys. I don't know what is a new moon, full moon, this, that. I just put on my chart, very simple. In TradingView, you type in moon phases, add it on a daily chart, and it's as simple as that. That one prints, I know it's going down. This one prints in an uptrend, and I know it's going to go up even more. So that's enough with that one. The other one that I wanted to look at over here is just these moving averages that I like to use, and you can see that price is starting to come down. So it's going to pull this. Typically it will pull this down at least to that 34, which is the 34 EMA, which is coming in at 22,500. So those are the key areas that I'm watching on the daily time frame and attempting to buy the dip on. The other chart that I'm looking at is the guppy indicator on the 12-hour. And I've told you before, in order for a nice uptrend to establish, you kind of want this to flip from red into gray into green. And if I show you historically what that looks like, so this one was a bit of a fake out over here, but if we zoom back towards where things were more bullish, so you can see over there, you had prolonged periods of red, starts to flip gray, price holds above that area, and now you start to establish an uptrend, which gives you a swing trading opportunity where you can stay in these positions for weeks to months. And I'm hoping something similar will form where we can at least rally for August. We broke down this main diagonal trend line over here. I'll make it bigger just so you know which one, which is important. That's a sign that we're slowing down the momentum. Now we can kind of track sideways and upwards, hopefully. So we don't want to go up too aggressively, otherwise it becomes unrealistic. But if this starts to go just gradually sideways and up like this, this will be fantastic. This is exactly what you want to see for a proper reversal. Okay, that's it for the guppy indicator. Now, touching on altcoins, very, very, very important. We have a whole lot. Okay, first I'll show you Bitcoin. I have on here the Gaussian channel. The Gaussian channel is just also a bunch of moving averages that help you to identify the main trend. I have this one on the daily over here. You can see that we have rallied into it, and we're still attempting to hold that uptrend. But bear in mind, this is typically where these major bull traps will happen. If you start to lose the middle of that Gaussian channel, things can start to turn quite quickly, and bulls would have got trapped. And it's more important for the altcoins, and the reason why is that I've outlined with this horizontal trend line over here on a whole bunch of these altcoins where their major resistances. Now, have a look at this, guys. Don't FOMO into things like Ethereum. Ethereum ran very, very hard, and you can see all these wicks that have happened over here, right? Well, you got that area that held, then you got a wick, you got a wick, you got a wick, you got a wick, then that's where price was lost. So this is a key area, very, very important area that you need to be looking at on Ethereum. And you can see price has come straight into that resistance. And guys, I drew this weeks ago, months ago. I didn't even adjust this now, and you can see how prices is respecting that level. Look at all those wicks that have been left behind. It's failed to close any full body candles above that area, and that would be a bearish sign. I mean, this Ethereum can pull back quite hard. So be careful of that if you're going long on altcoins, tying in with also what I just showed you on Bitcoin dominance. I'm only expecting about a 1.5% downside on Bitcoin dominance before it starts to bounce from that level. Matic over here, look, it's attempting to reverse the Gaussian channel, which is at least a good thing, but same thing, coming directly into that horizontal, zero closures above that level. Solana is quite weak in comparison to the other altcoins. It has a secondary horizontal over here, but $81 is where its next horizontal is, if you want to relate it back to what I'm showing you on Ethereum, Matic, and Bitcoin. So it hasn't even got close to that level yet. Also, still stuck in a red Gaussian channel. This one over here, Rune, you have $3.48 is its horizontal. Also rejecting out of that zone. Uniswap, he has its horizontal coming in way higher at $14.85, but at least it's turned this one green. I know this one's had some major bullish price action, and what I do like about Uniswap is that it did come out of this liquidity zone. I think I gave this call at about $4 or $4.50 is when it started to start its uptrend, and kind of that's what you're looking at over here. You need this to hold above that zone, which is $6.90. That could be actually a good buy. I like the horizontal that comes in on with these candles as well at about 7.30. Atom over here also moved quite nicely. I gave this as a call with the take profit coming in at 12.36. So I'm just going to remove that. Let me just turn that off. Okay, so here you have main resistance on Atom coming in at 14.56. Here we have Cardano. So Cardano also stuck in the red Gaussian channel. Main resistance is coming in at $1.05, so very, very far away. But what I do like about this one, which is why I put this channel over here, I see it stuck in this range here between the two yellow lines over here. So it's kind of bouncing along within that, and price is slowing down. That gives it a chance to, like Bitcoin, start to establish those series of higher lows. And maybe Cardano will do something soon. We just have to wait and see. Okay, AVAX, I'm just going to go through a few more on the altcoins. AVAX stuck below a important resistance over here at 24. I'd see it did close a couple above there. If you can see AVAX continue to hold as well the higher lows. So you got the low, high low, and it can start to do this, and it reclaims its horizontal, and that Gaussian channel starts to flip bullish, so it goes green. Then you have pretty much an easy passageway, at least with low resistance, all the way from 24 to 54. So that's a big move on AVAX. So make sure you chart that one. If you are charters, have a look at this one, put it on your watch list. 121% potential move on AVAX. Chainlink over here. Chainlink's main resistance coming in at $12.59. And all these resistances that I'm outlining are realistic levels that price could rally to in a bear market relief rally. Remember, in markets, sometimes these bear market relief rallies are bigger than what you can see in a bull run. They're aggressive. They move very, very quickly to the upside, so you can capitalize on them. Okay, I think this was the last one on Phantom. I don't have an upside resistance. It was so far away, an unclean chart, but it is caught in the top side of the Gaussian channel, which has been slowing down. And this one has gone sideways for a couple of months. So hopefully Phantom can start to reverse the trend and hold above these zones, turn the Gaussian channel green. And that's it for the altcoins. Okay, now going on to Bitcoin, we're fast approaching the zone that I'm watching over here. On Friday's stream, I said, look, I'm being a bit preemptive on looking at this range over here, but this is kind of what I see. So I drew this range in, which is coming in between a low of 20,727. I've got the top of the range at 24,172. I am still in my short position, by the way. For those of you that were wondering, I updated everybody over here on Twitter. So if you just go into my Twitter and you scroll, I didn't put too much over here. Firstly, I apologize as well for the very arrogant post with the finger over there like that. I was getting a lot of hate from the bulls. The bulls were getting super bullish over here, and I posted my chart over here. I said that for those wondering, I'll add to my Bitcoin short, trade right up to 24,300, which is exactly what I did. This is a short-term trade, and then I wrote over here, my stop is going to 24,800 because I can't babysit the trades over the weekend with family, peace, and have fun. So currently still in that trade. I'll be looking to close this trade anywhere around here in the zone over here. When I get off the stream, I'll probably open up my BYBIT account, and then I will close that short trade over here. So buy zones that I'm looking at, again, top of the range, $24,174. Mid-range, which is where I expect price to bounce from now, is 22,456. What I'll do to make it easy for you is, if you look in the link in the description below, make sure you follow me on Twitter over there. Literally, as soon as the stream is finished, I will put price labels on this chart and I'll update everything. I'll put it on Twitter for you. But I drew this previously. I said what I'm seeing is price pull back like that, and I'm expecting a bounce off of this mid-range zone, and maybe on the next attempt we'll break the top of this range and we can start to establish an uptrend. But for now, I kind of think that the old range has fallen away. And I'm just going to draw it in with the highlighter just to give you an indication. This was the previous range, right? So price was stuck between those zones over there. And I kind of see it as now we've broken into a new range. And this is most likely going to be the range that we are stuck within. So I'm going to give an attempted buy over here. If that fails, my next buy is coming in around 21,300. I'll let price, at least on a wick basis, it can hit the bottom of that range. But as long as the candles are closing as higher lows, that's the most important part. Then we're still attempting on a 4-hour chart to reverse the trend, and that reversal could start to move into the high time frames and reverse the daily and the weekly and so forth, which is why you need to control your risk. Because remember, the higher time frames, which are very, very important in these assets, the daily is still in a downtrend, and therefore taking longs means that your risk is still quite high with the long trades. You're playing into that relief rally, remember. So what I'm going to do it right now. Let me show you. So what I did is I put $1,000 into this account. Let's call it $1,000 challenge or whatever fancy name you want to give it. Make sure that you have a look in the link in the description below. You can sign up to Bitget over there. I do have a referral code. It helps me tremendously, and you can get up to $4,200 on your new trading account. You don't have to have KYC, and you don't need to have a VPN. If you're from the US, you would be applicable to use the Bitget account. So I'm trying a grid trading strategy. So all you need to do is you go to, this would be very low risk because it's spot. I think that most of my viewers are very similar to me. You guys prefer to trade spot and not go too heavy on leverage. If you are leverage trading, you're probably doing like a 3, 5, maybe maximum 10x leverage. So what you do is you go strategic trading, you click on the spot grid trading bot over here, or sorry, this will be manual. So if it's all strategy, this would be an automatic strategy where they trade for you. They outline what levels to buy in and what levels to sell at. We're going to do it manually because, I mean, I'm a chartist, so I can chart my own areas that I think are pretty reliable. Click on manual strategy. And now we're going to start to enter. So I'm taking 22,800 is where I want to go from. I'm going to put that over here. Let's put a price label. Okay, 22,800 is kind of the zone that I'm looking at. We'll give it some leg room. Okay, and then other price label, I'm willing to go into the support zone over here. About 21,900. Okay, so now what you do, and I'm going to go in with 50% of this position in spot over here. So 22,800 to 21,900. So you go here. 21,900 is the lowest price. Make sure you're on BTC. 22,800 is the highest price. How many grids do you want? I'm looking to enter that in about 8 different grids. So it will split it over 8. And I'm taking 50%. I'm going to put $500 if I can get it exact. Let's see. Okay. And that is it. Advanced settings. Now you can put what you can do is you can put your trigger price, so where does it begin, your take profit, and your stop loss. Look, I'm just going to leave this on manual for now. I'll re-enter the stop losses and everything like that, and the take profits once I see how the market starts to react, because remember, I'm only entering in 50%, so I'm going to be looking to ladder in more at a later date. So this will be my first time ever trying this over here. Let's have a look. Confirm the parameter, coin distribution at opening position, trading price 21.9, yeah, 8. We got 8 over there, investment amount 500, grid order mode, that's on manual. Okay, confirm. Okay, there we go. So that's it. It's in, and now we just basically wait. We just leave it. Over here, you can manually set your take profit. I want to see how the market reacts. You know, this will play out over a couple of days, but is China's meltdown going to bring crypto down? Well, you know, there's always some sort of a news event. I don't even know what China's meltdown is at the moment. I know the housing market in the US is showing signs of weakness, and there's a lot of things that are going on. You need to understand the risk, right? I'm not going in with like $1 million or anything like that. This is just short-term trading, looking to make money for jam. You know, you got your different types of do you want money for university, money for jam, money for retirement. This is money for jam at the moment. So that is entered on the 4-hour chart over here. Looking at this chart, I also want to just show you the momentum oscillators, which have basically reset to the bottom. Now those can stay down for a long period of time. Let's just see what the 12 hours looking like. Okay, 12 hours just coming down. So be prepared that over the next couple of days, we probably are going to have some downward price action. And the most important thing to me is to maintain these high lows. I'm willing to bid and place my bets all the way down to those levels. If you start to lose that, then it's a big trap. Everybody got trapped, massive bull trap, and we all in trouble. So using this to time as well, I have the horizontal box over here, which is coming in between about 21.5 and about 22.6. So this is the level that if you want to be bullish in the market, has to bounce. I've got here the BBWP, which is Eric Crown's trading system, which shows how much volatility is going to come into the market. And you can see that we are picking up with the RSI turning down, which means that I'll wait for this to start to get to overheated territory to kind of see, have I successfully bought the dip, and should I re-add on that other 50%. Now, the last thing that I want to show you over here on the 4-hour chart, I'm just going to make that big, is I'm not ruling out the possibility for this, guys. This is something bearish, so close your eyes, hide your children. But look, let's put on a 12-hour chart. It might make it a bit cleaner for you to see. There is a real possibility that is all a big trap, and this is happening. If you have a look, take a look at this. So in January of 2022, I'm sure you can all agree with me, right? You got, just hold on, that's the wrong tool. Just grab the highlighter. So you got low, higher low, and higher highs. This was a bit of a weird one because you got a higher high there, lower high, higher high. And then look what happened. Like a big bear flag, right? Straight down. This one over here, you got higher high, you got low, higher low, and down. Now let's zoom into what we currently see. Same thing, okay? You guys all know about the high lows. Here you got higher high, lower high. Remember from the first one? Higher high. Let's look at this. Actually, I haven't even looked at this on the 12-hour. How did these candles close? Okay, we got another higher high here. So higher low, higher high. But remember, from the Elliott wave, which is the 5-wave pattern, this could end up being wave 4, and then you have wave 5. Wave 5 has a measured move which takes you down to $12,000. $12,000 is probably where you have the most confluence in the market, and that's why I'm not really willing to go all in right now. I'd rather be late to the party than, like some sort of a drunk driver that has a car accident and gets completely wrecked. Excuse the analogy, but I don't know how else to basically put it. I'm willing to take small bets until the daily at least completely reverses. So this is what I'm looking at, guys, and you have to be cognizant of all of that. I think we pretty much covered everything. One of my longer sessions over here, but stay tuned. Follow me on Twitter. This is where I'm going to keep you up to date with the most amount of information. And that is pretty much, I think, it. Is there anything else? Yes, make sure that you sign up to the Daily Candle newsletter, because that's where we give the most amount of alpha. We have a look at trade setups. We give you our thoughts on the market, from like total market cap, Bitcoin dominance, DEXI, what's the DEXI doing, of which I actually want to quickly have a look at. That's super important. Let's see what the DEXI is doing. Okay, look, the DEXI did lose a key level over here. I wanted to see the DEXI, well, if you're looking for the bearish case in your shorts and stuff, DEXI lost the 105.7 level, but look, it still is holding this diagonal trend line. So I think it's going to be very interesting over the next couple of weeks. Let's see how these things play out. DEXI hasn't completely reversed and gone into a bear trend yet. This is still very much bullish. DEXI takes a long time, guys. You need to wait like weeks to months to understand exactly what the DEXI is doing and if it has truly reversed or not. I think that's it, guys. Make sure that you give the video a like, subscribe, hit the bell notification so that you can be informed of any time that we go live. I appreciate each and every single one of you. Thank you so much for your time. Make sure that you trade safely out there and manage your risk. Manage your risk. Don't get too aggressive. Don't get caught up in the FOMO. That is it from me, guys. Until next time, I will see you all on the following video. Have an absolutely stellar day. Cheers for now.